There's a company that owns shares in Apple, Microsoft, Amazon, every major bank, and even your landlord's apartment building, and most people have never heard of it. Its name is BlackRock, and by the time you finish this video, you'll realize it touches almost every dollar you earn, spend, and save. Here's what makes this unsettling. We grow up believing the economy runs on competition. Thousands of companies, millions of investors, a free market where no single player holds too much power. But what if that's not exactly how it works anymore? What if one firm, just one, sits at the center of nearly everything? BlackRock manages over $10 trillion in assets. Let that number settle for a second. $10 trillion. That's more than the GDP of every country on Earth except the United States and China. They are the single largest shareholder in almost every company in the S&P 500. They own significant stakes in the biggest banks, the biggest tech firms, the biggest energy companies, the biggest pharmaceutical corporations, the biggest defense contractors. And yet, if you walk down any street in America and asked 100 people to name the most powerful company in the world, almost none of them would say BlackRock. That gap between their actual power and their public invisibility is exactly what makes this story worth understanding. BlackRock wasn't always a giant. It started in 1988 in a single room inside a Manhattan office. Larry Fink, a bond trader who had suffered a devastating $100 million loss at his previous firm, co-founded the company with a simple but radical idea. He wanted to use computers to understand risk better than anyone else on Wall Street. At a time when most investment decisions were based on gut instinct, handshake deals, and long lunches, Fink built sophisticated software, a platform called Aladdin, that could analyze thousands of risk scenarios simultaneously. It was quiet, it was nerdy, and it changed everything. BlackRock grew steadily through the 1990s, but its real explosion came during crisis. In 2008, when the financial system was collapsing, the U.S. government had a problem. Exposed banks held trillions in toxic mortgage assets, and nobody could figure out what those assets were actually worth. The balance sheets were so tangled that even the banks themselves didn't fully understand their own books. So who did the Federal Reserve and the U.S. Treasury call? BlackRock. They hired Larry Fink's team to untangle the wreckage of Bear Stearns, then AIG, then Fannie Mae and Freddie Mac. BlackRock was essentially given the keys to the financial system's engine room during the worst economic disaster in 80 years. And they delivered. The Aladdin system could model the risk that others couldn't. BlackRock helped the government understand what it had inherited and how to sell it off. But here's the part most people miss. That crisis didn't just make BlackRock useful, it made BlackRock essential, and it made them enormous. While other firms collapsed or shrank, BlackRock absorbed competitors. They bought Barclays Global Investors in 2009, which at the time was one of the largest asset managers in the world. Overnight, BlackRock became the undisputed king of the industry, and they haven't slowed down since. Now here's the part that most people don't realize. BlackRock doesn't own all these companies the way you might think. They're not sitting in a boardroom making decisions for Apple or ExxonMobil directly. Most of that $10 trillion belongs to other people. When you put money into a 401k, a pension fund, or an index fund like an iShares ETF, there's a very good chance that money flows through BlackRock. They manage it on behalf of millions of ordinary Americans, retirement funds, university endowments, and even sovereign wealth funds of entire nations. So technically, it's your money, but BlackRock votes those shares. And this is where it gets interesting. When a company holds its annual shareholder meeting, someone has to vote on executive pay, board members, environmental policies, and corporate strategy. Because BlackRock manages such a massive pool of assets, they cast more shareholder votes than almost anyone else on the planet. Think about that for a moment. One firm casting votes that shape the direction of nearly every major corporation in America. Not because they own the money, but because they manage it. This is a kind of power that doesn't fit neatly into any category we're used to. It's not government power. It's not traditional corporate power. It's something new, something structural, something most of us never even think about. And then there's Aladdin. Remember that risk software Larry Fink built back in the late 80s? It didn't stay inside BlackRock. The company licensed it out. Today, Aladdin monitors over $21 trillion in assets, far more than even BlackRock itself manages. Pension funds, banks, insurance companies, and governments around the world rely on this single platform to make investment decisions. One software system influencing the flow of $21 trillion, built and controlled by one company. Let's zoom out and connect the pieces. BlackRock, along with two other massive firms, Vanguard and State Street, are often called the Big Three of asset management. Together, they are the largest shareholders in roughly 90% of companies in the S&P 500. Now, economists have raised a serious concern about this. It's called common ownership. Here's the simplest way to understand it. Imagine BlackRock owns large stakes in both Delta and United Airlines. In a truly competitive market, those two airlines would fight aggressively on prices to win customers. But if the same investor profits from both companies, there's less incentive for either airline to compete too hard. Why slash prices and hurt one company's profits when the shareholder benefits from both doing well? Studies from top universities have actually examined this. Researchers at Harvard and the University of Chicago found evidence that airline ticket prices were 3 to 7% higher on routes where common ownership among airlines was strongest. 3 to 7% might sound small, but multiply that across millions of flights and it translates to billions of dollars coming out of consumers' pockets. And airlines are just one example. The same ownership pattern exists in banking, pharmaceuticals, tech, and media. Now, does BlackRock actively pick up the phone and tell CEOs to stop competing? Almost certainly not. But the structure itself creates the incentive. When the biggest shareholders in competing companies are the same handful of firms, competition quietly softens, not through conspiracy, through alignment of interests. That's what makes this so difficult to address. There's no villain twirling a mustache. There's a system, a structure that concentrates influence in ways that are almost invisible. And this brings us to how it affects regular people. If you're renting an apartment in a major city, there's a growing chance your landlord isn't a person, it's a corporation. And behind that corporation, there may be institutional investors, including BlackRock. After the 2008 crash, BlackRock-funded entities bought tens of thousands of single-family homes in the Sunbelt in cities like Atlanta, Phoenix, and Charlotte, often outbidding families at the exact moment housing prices were low. Those homes became rental properties, and as institutional money poured into residential real estate, housing prices climbed. For millions of young Americans trying to buy their first home, the dream became harder. Not because of a natural market, but because they were competing against firms managing trillions of dollars. Your retirement fund, your rent, the price of your plane ticket, the interest rate on your savings account, the cost of your prescription medication. BlackRock doesn't control all of these things directly, but its fingerprints are on the machinery behind every single one of them. And here's the biggest question of all. Who regulates this? The answer is complicated. BlackRock isn't a bank, so it doesn't face the same rules as JP Morgan or Goldman Sachs. It's technically an asset manager, a custodian of other people's money. That distinction keeps it outside the tightest financial regulations. Larry Fink regularly meets with heads of state. He has attended White House summits under both Republican and Democratic administrations. Former BlackRock executives have held senior positions at the Federal Reserve, the Treasury Department, and the National Economic Council. This isn't corruption in the traditional sense, but it is a revolving door between the most powerful asset manager on earth and the institutions responsible for overseeing it. And it raises a question that our current regulatory framework simply wasn't designed to answer. How do you govern a private company that has become essential infrastructure for the global financial system? Because that's what BlackRock has become. Not just a company, not just an investor, a piece of infrastructure, like a highway or a power grid, that the modern economy runs on. Except this infrastructure is privately owned, lightly regulated, and answerable primarily to its own shareholders. Here's the takeaway. BlackRock isn't hiding. Everything in this video is based on public information,
Their holdings are disclosed, their influence is documented, their executives give speeches at Davos and publish open letters. And that might be the most important part of this whole story. The most powerful forces in the modern economy don't need to hide. They operate in plain sight, inside systems so complex that most people never look closely enough to notice. $10 trillion. Stakes in nearly every major corporation. A software platform monitoring $21 trillion. A revolving door with governments. And a name that most Americans still can't recognize. Now you know it, and once you see it, you can't unsee it. The question isn't whether BlackRock is good or evil. The question is whether any single entity should hold this much quiet power in a system that was supposed to belong to all of us. If this changed how you see the financial system, subscribe. We break down the systems no one talks about every week.